Welcome back to another episode of Multifamily AP360. And today's our guest is Amanda Larson from MIX Equity. So, welcome, Amanda.
Thank you, Rama. Thank you for having me. It's a joy and a pleasure to be another guest on your podcast.
Awesome. And thank you very much. A little bit about Amanda Larson. So, Amanda Larson is the founder of MIX Equity, a real estate private equity company with a mission to empower busy professionals by helping them build multiple streams of income by investing in apartments. With more than 15 years of experience in engineering and construction, Amanda brings a solid foundation in project management, engineering, and an MBA to her real estate investments. With a significant portion of her career spent working abroad for multinational engineering and construction companies, she has honed her skills in leading projects and teams towards a common goal. So with that, Amanda, you want to add anything?
Yeah, no, thank you, Rama. That was a great introduction. I might just add a little bit of more context to that. So, like my bio, as Rama explained, I have a background in engineering and construction and worked in the corporate space for a long time. And as time went on and I got further and further into my career, I felt, as I do, I think a lot of professionals in the corporate space feel, is just that you don't quite have full control over your path. And you keep chasing more opportunities, but the opportunities end up taking more and more of your time. And the trading for time doesn't quite make up for any benefits that you gain. So really that's where my entrance into real estate came, is this wanting or this desire to get more control over my income and my time. And I think that probably resonates with a lot of professionals. And so that's what ultimately led me to real estate and into multifamily. So just to provide that context to my background.
Thank you for adding that. So, from never wanting to own real estate to being a full-time real estate investor. So, can you elaborate on that?
Yeah, so I grew up in a family that owned real estate, and all single family homes and self-managed, self-landlorded. And what I saw was how a lot of people do it. And it's a great way to own real estate, but it's not scalable. So you buy single family homes and you are in charge of maintenance and fixing everything and collecting rent and, taking care of the house when it's empty and getting it ready for rent and spending time doing property tours. And I saw my family put in a lot of effort to do all that, and it wasn't very scalable. And I didn't see at the time what the potential was in the long term. And so growing up, I thought I never wanted to do this. I'd rather work for a living because this seemed like a lot of work, but not at the time, not a lot of return. So, I swore off real estate for a long time. And then I bought my first single family house in 2010 and during the recession. And I was living overseas at the time, so I didn't have to deal with any of that. I had somebody else taking care of all of it for me. But yeah, growing up and then for a very long time, I didn't want to own real estate. I didn't have anything to do with it. And simply because I didn't see that there was another way of doing it. And so once I realized that there was a way for scaling and a way to hire professional management and a way to do it in such a way that you're not taking care of the day-to-day maintenance of everything, then I was bought in. I knew the power of passive income, and I knew the power of real estate as a wealth creating, avenue. I just didn't know that there was other ways to do it other than what I saw growing up. And so, yeah, now I'm full-time real estate and I love it and I see it as a great opportunity. It's helped me get control, like I said earlier, control over my time and control over my path. So yeah, that's kind of the background of that, never wanting to own a house and be a landlord to now I own apartments and I'm not the landlord.
Yeah. So, what a change of perspective or change of mindset shift, right?
Mm-hmm.
So, awesome. And thank you. So, you worked outside of, yes, and is that engineering construction side?
Yeah, so I got my undergraduate degree in electrical engineering and moved. So I grew up in Nebraska, so I went to the University of Nebraska. And when I finished my degree, I ended up moving overseas to Australia. And I lived and worked over there for 7 years. I started off as a site engineer working for one of Australia's largest construction companies. So I did a lot of industrial projects and moved all over. And that's, that's another part of my background is I didn't have control over where I lived. So wherever the project was, which was usually, a somewhat undesirable place in the middle of nowhere, Australia, is where I lived. And so every year, every 2 years, the project would finish and I'd move somewhere else. And no one asked you where you wanted to go or if you were okay with it. And for a long time, it was interesting. It was fun. It was exciting, but I couldn't see myself doing that forever. It's not a way if if you want to settle down or have a family or, just gain some stability and gain some long-term friendships. It's challenging if you're constantly on the run. Yeah.
So what you learned about US real estate living overseas?
Yeah, living overseas, Australia had allowed me to open my eyes. So real estate in Australia, at least when I was there, and I'm almost certain it's still the case, prices are just extremely high to buy a home, and people are bidding them up, and rent is actually quite a bit less than owning. Renting is less than owning, and so what you're paying in rent is not paying the mortgage for the owner. And so when I found this out, I was a little bit wondered, how do they do this and why do they do this? And when I was talking to someone, I said, this is odd that it's a negative cash flowing property. And their comment was, well, yeah, if you could cash flow, then everyone would just want to own everything and rent everything. And I thought, wow, this is not quite my experience in the US. And so I realized, what an opportunity is to have cash flowing properties and long-term fixed rate debt, which again was not the case in Australia. Most debt, even for homes, was floating on some scale. So it's an opportunity if you live in the US to take advantage of this because this opportunity doesn't exist everywhere. And I think that's why a lot of people really enjoy, find it a benefit to invest in our US markets.
So how long it took you to, capitalize that opportunities in US real estate space?
So I bought my first rental when I was living over there. So I was there in 2010 and I bought it was financial crisis in the US and I ended up buying a foreclosure. My family being in real estate helped me with that. They helped me find it and helped fix it up. I just had to wire all the money and then, cover property management and things like that. So that's when I first started investing and didn't really intend to scale and bought another single family and started renting that, and then read a little book, Rich Dad Poor Dad, the little purple book that everyone, it seems to be the gateway into real estate, and read that book and started exploring more opportunities and thought about owning more single family, and then ended up going to a meetup and happened to be focused on multifamily syndication. And I didn't know such a thing existed until I heard somebody talk about it. And it was like this, this light shone down on me. And I was like, wow, this is, I think, more what I'm wired to do. It's more scalable, a little bit higher barrier to entry, takes a little bit more time to get started. But it's in the long term, I think it's the long-term path for serious investors who really
Yeah,
want to be in real estate.
sure. Awesome. Thank you. So how do you get into multifamily space,
Yeah, so after going to that first meetup, I just started networking. I've looked up, who was doing it in my area. I'm in Houston right now, so multifamily syndication, multifamily real estate is popular is not the right word, but there's a lot of networks that you can get involved in and a lot of opportunities to learn from other people. So I just started networking, and that's no matter what you're doing in real estate, it's a relationships business. So networked. Eventually I ended up joining a mastermind or mentorship program that helped a little bit more with the education. I think there's a lot of education out there available to anyone. Joining a mentorship program is just one more avenue for, getting your head wrapped around it. And then also, more than anything, it's the network in this space, especially when you're raising capital from other investors. I feel strongly that you need somebody that's a little bit more experienced than you are when you're first getting started, and that can help you put some guardrails up and make sure you don't get in too deep or over your skis, because it's pretty easy to get excited. And so I did that. I joined that mentorship program, and I've joined a couple since then. And yeah, it's the power of the network. And again, like I said, relationships. It's a people business. So meeting as many people as you can, talking, learning, helping other people grow, meeting with brokers, touring properties. It's really just this consistency of the day to day that is how you get started and how you grow in this space.
Sure. So for how many active deals you guys closed and what kind of role you performed?
I started investing as a limited partner. As a general partner, I closed on my first acquisition in September of 22, and then closed on my second one in Houston in February of 23. So anyone in the space knows that those were interesting times. It's been interesting since then. So I'll say that the first acquisition was on bridge debt, and we still, that one's going well operationally. It was a situation where we wanted to re-tenant the property. We saw the opportunity. It was a true value add, and that one's going well. So we've done all the CapEx, program. We've gone through that. We've been able to increase rents. We're following the business plan, and things are going well. That's located in San Antonio. And the second one is Houston, and that's a little bit less of a value add. Ended up getting fixed rate debt on that one. So long term, we have a lot of runway ahead of us, and that is more just, I guess, take operations as some value add, nothing heavy. It's just continue operating and distributing cash flow to our investors, which we've been able to do consistently for the last year or so.
Yeah, awesome. Thank you very much. What exactly were overall, acquisition criteria and also what's your overall business plan? Not only existing deals and, future deals also.
So I focus mostly on, I would say, unit counts of around 100 to 200 units. Can go, a little bit more, a little bit less, but that's, the bread and butter. The first deal I did was 150, and the second deal was 260. So we've gone outside that box. And now we're looking at deals a little bit smaller, but still able to support a full-time property manager. I think that's the critical point that people sometimes overlook. And so that's unit count. And right now I'm focusing only in Texas as a general partner. My role is primarily acquisitions. So in order for me to really understand the market, the sub-market, be able to tour, get to know brokers, Houston and Dallas are accessible, and they're both very strong markets. And there's not really, at this point, there's not really a need for me to expand beyond that for what I'm doing right now. That's not to say never, but for acquiring and being able to tour and get to know the property at a deep level, it's Houston, Dallas, Fort Worth, and a little bit of San Antonio.
Yeah, sure. So can you expand on like how do you identify markets? What do you see when selecting a market?
Yeah, so the market for me, it comes down to the basics: job growth, population growth, diversity of jobs, diversity of employment. And then in the sub-market, it's, how accessible is it? What's the school district like? What's the crime like? What's median household income? And can it support the business plan? A lot of deals are being marketed that you can raise rents 10, 15%, but you really have to dig down into what's the household income in that area? Can they afford it? It's fine to be able to say that you can put granite countertops and stainless steel appliances somewhere, but if you can't get a return on that investment, it's not a viable business plan. So it's really digging down into the layers, and to do that, you really need to be familiar with the city and the neighborhood and what's going on. What are the competitors doing? What's the apartment across the street doing or down the block doing? Is it in a good school district? All those things play an important role when selecting which deals to go after.
Yeah, got it. Thank you very much. So what kind of resources you would use to get like, job growth or population growth or, other data?
Yeah, so usually things like that can come from everything from, it starts with the OM from the broker. Again, that's a marketing packet, so you have to take it for what it is. And then there's websites like citydata.com, and RealPage has some analytics that you can get into. And then if things look promising, I'll usually get a CoStar report, and that'll give you a real breakdown of everything from what rents are doing in the area to what the comps are doing to population growth, median household income, what the projected cap rates look like. Again, it's all projections, but it's really helpful, and it's one of the best resources if you are really serious about a property and going to put in an offer. I would say, that's one thing that I always get, and I go through that quite rigorously to see what the outlook looks like.
Yeah, thank you for sharing that. So you guys purchased in like September 2022 and in 23, right? So in
Mhm.
the middle of interest rate hikes.
Yeah.
So what kind of challenges you guys faced?
So I'll start with the most recent acquisition. It was February 23, we closed, and we actually went in thinking that we were going to use bridge debt. And right in the middle of all of that is a time when lenders started retrading on their deals, and people ended up having to raise more capital at the last minute and scramble, and ended up through all that transitioning and getting fixed rate quotes on the debt, and ended up closing with long-term fixed rate loan, which in hindsight, we had to raise more capital at the front end, but in hindsight, it was really probably a blessing in disguise. And so that one's set. We have a long runway. And then the other one is on a bridge loan, and we have a rate cap. So that's very helpful. Never do floating rate loan, my personal opinion, without a rate cap. And then looking at either refinancing or buying a new rate cap for that one in the coming 6 months or so. But
Yeah,
yeah, I would say interest rates in general have been a challenge for any real estate investor the last couple years.
yeah.
And
So
yeah.
any other challenges overall from, rent growth point of view or expenses growth or controlling expenses
Yeah.
or, increasing overall NOI point of view?
Yeah, so I mean, probably in line with what a lot of operators are seeing. So the last year, rents have been mostly flat in most markets, if not negative in some. Houston has been fortunate to have some rent growth, not a lot, just organically, separate from the value add. But in the past year, yeah, I would say, yeah, rents are flat. Delinquencies have been trending upward. I think we're leveling off, but trending upward a little bit. And then on the expense side, insurance, I would say, is the big one. Insurance in the last couple of years has gone up quite dramatically and unexpectedly. But again, that's leveling off. So I feel like the market has had a lot of unknowns in the last couple of years, which has made it hard for anyone to transact because you no one's the uncertainty is what people struggle with. But I feel like in the last 6 months or so, things are starting to calm down, and there's more certainty in the market for buyers and for sellers. And as long as we know what we're working with, we can work with what we know. It's, when things are all over the place, when interest rates are going up to a level that, no one knew it was going to stop. But I think, that's flattened out a little for the most part. The 10 years still bouncing around a little bit, but things have, there's more clarity in the future than what we had, 6 months previous from now. And so that's helping the buyers come more in line, and the sellers, see things a little bit more eye to eye. So I do see more transactions taking place, and, more opportunity in the market, in the next 6 months.
Got it. So what do you see in the current market?
So I see, just generally, I see more deal flow coming to market. I see, last year at this time, there was hardly anything coming to market. Right now, there's more. Some are selling because they need to sell. I would say most are selling because they need to sell for some reason or another. Either they have a bridge loan maturing or some other loan maturing, or I see a lot of 1031 exchanges or reverse 1031 exchanges right now. And those are most of the deals that are actually closing. Then there's deals coming to market or opportunities coming to market where they don't have to sell. And those may or may not end up closing because sellers usually, in that instance, sellers oftentimes have an expectation that, buyers aren't willing to come to. So oftentimes those come to market and then don't end up closing, but we might see those in a couple years.
Got it. Thank you. So would you share any best experience so far?
I would say best experience, I think it's not specific, but I would just say just the whole, recognizing what real estate and what having multiple streams of income and investing can do to a person's life. So I know it dramatically shifted my outlook, my perspective, and my future, and I see the same happening for other investors. And so once anyone can add another stream of income to what they're working with, I think it's an empowering experience, and it gives them the space to think bigger picture and think more longer term than, just what they're doing day to day, which I think a lot of people get caught up in the day to day and don't feel like they have full control. So really, I mean, it's not specific, but it's more broad, and it's more of an outlook and more of a mindset, what real estate or investing can do for your life and for your family.
Sure. Thank you. Would you also share any challenging experience?
I would say challenging is, anything worth doing is challenging, but on the other side of that is opportunity. So challenging and getting started was challenging. Just getting your first deal done, it was, a huge hurdle. And the mantra at the time was get your first deal done and the second one will be easier. And the last couple of years, I think, have been challenging for all operators and all, sponsors. More challenging than the previous, 10 years when a lot of people got started. But I think on the other side of all these challenges, are really great opportunities for anyone wanting to get into the space. I see it changing or shifting slowly, but, on the other side of all of this, I think it's going to be one of the best times to invest in real estate.
Great. So any personal habits that are helping you to be successful?
Just habits in general. I'm a creature of habit and routine, and that's helped me a lot. I think, I start my day every day with either going for a run or going to the gym and staying fit and staying active and get my mindset right for the day. And then just doing the thing that needs to be done every day is staying active and staying in touch with brokers, staying in touch with investors and touring. And it's a lot of, the space isn't necessarily hard in terms of, you don't need to be, the smartest person in the room to be able to do it, but it does take some grit and some tenacity, I think, to be successful in the space, and just keep doing work when you don't want to do the work, because it's not an immediate payoff. It's not immediate gratification, but it's still showing up every single day and being consistent. So that's really it's thinking long term, and I think that's what it takes to be successful in this area.
Awesome. Thank you. So any books that impacted your life?
Other than, the little purple book that changes everyone's life, I'm sure your listeners have heard a lot about that book, but I'll also add, I'm a big fan of Brian Tracy, and one of his books, Maximum Achievement. It's really just a roadmap to being your best self and setting goals and getting in the right headspace and treating yourself right and taking ownership of your life and your future. And so that's a book that I've given to a few people as gifts, and I know it helped me change my way of approaching goals and approaching challenges. And so that's another book that I would recommend for anyone
Awesome.
interested.
Awesome. And how can listeners can connect with you?
Yeah, so there's a few ways. Probably the easiest way is send me an email. It's Amanda@AmaX, so that's just AMAX equity.com. You can go to my website. I have a free download for anyone wanting to get started passive investing, kind of what to look out for, red flags. That's under the resources tab. on the website. It's xequity.com, or connect with me on LinkedIn, just Amanda Larson.
Awesome. And thank you very much, Amanda. Thank you. Really appreciate it.
No, thank you, Rama. It was a pleasure talking to you and your listeners. So thank you again so much.
Thank you.